Hello, in this presentation we're going to make a payment for our inventory purchase within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to basically just be issuing a check. However, this check will be for a purchase order that we had prior put in place for the purchase of inventory, in our case, guitars. It's important to know the flow here as we think through this, and it's a little bit different than we might think, depending on or based on our normal purchase type of activities. For example, if we were to purchase something from Amazon, I'm going to select the drop-down menu to demonstrate this. We're going to select the drop-down menu. We're considering the vendor section because we're making a purchase of inventory. Typically, we would pay for the inventory, meaning we'd actually have the credit card payment go through, and then the inventory would be shipped to us. In this case, when we buy a lot or in bulk, or if we have an agreement with a vendor and we are purchasing, oftentimes we don't make the payment up front. We give a purchase order. So we're saying that a purchase order happened. We have a purchase order. We then are receiving the inventory at a later time. And at that point in time, we're getting the bill and we're going to issue the check at that point in time, as we can check the inventory and match it to our purchase order that was created. So it may be a little bit different. This purchase order may be a little bit different than we typically think, and there's actually no financial transaction. When we create the purchase order, we're just basically saying, hey, it would be like us looking on something on Amazon and saying, I want that thing, and just telling Amazon, hey, I'd like that thing, and not actually paying them until they deliver it. Once we receive it, then we're going to either enter the bill and or make the payment at the point in time of receipt. So we, the purchaser, therefore have more kind of control in that case. We're not going to make the payment till we verify that we've gotten the product. And so that's what's happening here. We ordered guitars in the past. We've received them now, and we're actually just going to write the check. We're going to say, hey, there's a bill within the inventory that we have received, and we are writing the check for it, and we're going to populate that check in part with what we've created in the purchase order. We'll be able to link those two things. So we're going to select the check here, and we'll just be writing a check. The check number will automatically generate. That's going to be good whether we print the check from QuickBooks or if we're doing the checks in some other system. We should be matching that out and making sure that they tie out. Then we're going to select the Choose Payee, and we're going to select, in our case, Epiphone. We're paying for guitars that we purchased. Our vendor is Epiphone. So here's our drop down, here's our payees, here's our vendors. I'm going to then type in Epiphone, and there we go. So that's the one. Now when we do that, we see this pop up here. We have this adding. This is our purchase order for the 400 that we requested, and this is what we have. So we can populate this whole check through this matching of the purchase order to the check and link it. So this is going to be a great feature to have. We're going to say add that. And let's go through and see what happened here. If we scroll down, we see the accounts here. We can put in the accounts typically that we would be recording to. So if we paid the utility bill or something like that, be utilities expense, telephone expense, whatever the payment was for would be going here. Items, however, are going to be down here. These are the inventory items. So remember, we want to keep that separate. Whether we're writing for an expense or an asset, like I purchased equipment or I paid for normal business expenses, those would be up here. If we have an inventory item, such as a guitar in our case, that we are buying and then selling, those will be populated down here in the items section. Populated for us automatically. It pulled over the item number or short form, the product or service, the description. It's a Epiphone Les Paul, quantity 1, $400 price. That's being pulled over from the fact that we have this on the item list. And we even have the customer here who we purchased it for, which is Eric Music. Remember that this customer field will not always populate. It's going to populate if we chose the customer within the invoice that we made, depending on if we bought this guitar in particular for this particular customer, Eric Music. So we're going to scroll back up and check everything else off. The other side, it's Epiphone. It's obviously going to be the checking account that we're writing the check for. The mailing address, we're going to keep it here. We're not going to have a mailing address, and so it would be good to include that, but it's not required to process. The check, we're going to say the date is 01/25/21, January 25th, 2021. Check number should auto-populate and should be good after the first check we write. We could select if we're going to print it or not. If you are to print these, then you're going to want to have the printed checks or there's still pre-formatted checks with the check number on it. You'll have to make sure that you put it in the printer in the correct way and then print these out, and you can print them straight out from the system, but you still have to buy the checks in order to do that. And then we're going to have the rest of the information will just be down here. Here's the item, kind of like the expense account. What does this item mean? It means we're going to be decreasing the account or increasing the account of inventory. This is an inventory item. So the journal entry related to this check then is going to be, by the fact that it's a check, decreasing the checking account, and the other side of it will be increasing the asset account, the inventory, which we will then expense at a future time in the form of cost of goods sold once we sell the inventory. So we're going to go ahead and save this and then check out the financial statements and see what happens. So we're going to say save and new, the green button on the bottom. And it's actually telling me that the check number already exists. So I'm going to say, do you want to save anyway? I'm going to say no, and I'm going to adjust this. Usually that auto-populates, but for some reason the check numbers are not populating in order. I'm going to put check 2004. This is probably because I'm going a little bit out of order as we go through this problem. We're bouncing around in time a bit. So I'm going to change the check number to 1004, the check number we are on. If you had to check that, you'd have to go to the check register and see which check number you're on. Obviously, if you were printing checks, you would have the checks there, and you can check the checks that you're writing on. Just make sure that you're not skipping checks. That's the point of the process. So you want to make sure that if there's a check that's been skipped within the check number, then that could be a problem. So we're going to keep that. We're going to say save and new. And there we have this, and we're going to close this back out. And then let's take a look at our reports. We're going to go to the reports left-hand side. We are going to run first the balance sheet, or only the balance sheet. It's all we're going to run. And then we're going to check the balance sheet. That's what we will be running. The dates then are going to be 01/01/212, 01/31/21, and that's January 1st, 2021. To January 31st, 2021, and then we're going to run that report. So here is the report. The checking account should be going down by $400 for that check that we wrote. We will select that checking account and see if that is indeed the case. Here it is, check number 1004, Epiphone inventory. Let's check on that and see if it is what we think it should be. So there's Epiphone, there's the payment date, the check number. Scrolling down, this is the check we have. We're going to close that out. We're going to look at the other side. We're going to close it. I'm going to go back to the report. We're going to go back to report summary. And we're going to scroll down to the inventory assets. Here's the inventory asset. And this should be going up. If we scroll to the right, we see the 400 there, increasing that amount. And clicking on that, there is our check. I'm going to close this back out. Now we did purchase inventory. It's increasing inventory here. It might be worth taking a look at the inventory report and see the detail there. In order to do that, we can go to the reports on the left-hand side. We want to see the inventory. And I'm going to do the inventory valuation detail. So we'll select the inventory valuation detail. Going to change the dates once again from 01/01/21 to 01/31/21 and run that report. So once again, January 1st, 2021, January 31st, 2021. And then we could see our detail that we have here. So it's listed out. These are our types here. So we have an ELP. That's an Epiphone Les Paul for us. We have the other types of guitars dropped down by the type. And then we have, of course, this 1004. There's the check that we just wrote for a new Epiphone Les Paul. Here's the Epiphone quantity 1, 400. We currently have 2 of them on hand, and that's $800 total. Now note that the amount that we pay could change because the vendors we buy them from could increase or decrease the price. And the online, we use here the first in, first out method is what the online version is going to use, as opposed to the on ground version, which is going to be using the average method. So for this particular guitar, if it just went up or down in price and we had two of them, then we would take the first in, first out, and when we sell it, we would assume we sold the first one we bought, just as an assumption. So that's how, as opposed to averaging the prices together and taking an average price. So that's the difference between the on-ground and the online version. Within here, we're going to purchase within each of these pretty much the same purchase price, which, depending on your industry, may be the case for much of the transactions. So that's how the inventory will be working. And that is going to be the purchase of inventory.